Over the past weekend, we woke up to the news that Hamas had attacked Israel, and Israel has now declared a war, and we are yet again embroiled in another conflict in the Middle East. And that's still at the backdrop of the Russian and Ukrainian war. So we have two major geopolitical events going on in the world, on top of continuing volatility and uncertainty in the US markets. So understandably, there is a lot going on with the markets and the stock prices. And what I'd like to do is address the current situation and my expectations of it. So there are three things that I want to chat briefly about. First is the effect of the war on the stock market. The second is the impact of the continuing high interest and inflation in the US market. And third and foremost is what would I recommend that you do given the situation that's going on in the economy and the markets. So let's address the Middle East situation first. It does not appear from the reaction of the markets so far that the markets expect this conflict to escalate into something much grander and go beyond what's the regional conflict that we have seen several times throughout many years. So the energy prices have risen, but the stock market has had pretty muted response. So that is the history, that's the story so far. And it remains to be seen, obviously, with the developments and what will happen in the region. But hopefully the diplomacy will prevail and the conflict will not escalate any further. I have been reading quite a bit in the past few days about what experts forecast about the impact of the war, and there is quite a bit of comparison to the Ukraine war. We have seen so many months of conflict. It's a protracted war. It's draining resources, and there is an effect on the world economy, but not as big as it could have been. I guess the story with these conflicts is let's wait and see. There is a potential for escalation, but at the moment there is optimism that it will be localized, be short and swift, and markets will stabilize as a result, and we won't see a huge volatility in the US markets as a result. It's interesting because last week I actually attended a big Vanguard conference just to see what they think about the economy, because again the markets have been a little volatile in the past three months, and according to Vanguard, before the war started, they expect the interest rates to continue to stay elevated, and they continue the fiscal and monetary policy to diverge a little bit because the fiscal policy is stimulating the economy post-COVID, and the monetary policy is restricting it because of the effect of inflation on the economy and its potential negative effects. So we have two things going on here with the US economy. The rates will stay up, the economy is still resilient, the labor market is still strong. So we will be in this period of, I think, continued volatility, but not too, it shouldn't be too bad going forward, as long as no other unforeseen event happens in the world. What the economists at Vanguard expect is, again, the rates will not come down anytime soon. And they had expected a 90% probability of recession. They have now dropped it to 70%. So the Vanguard economists still think there is a possibility of recession, but it is lower. And if the labor market continues to be strong, and we have better news on inflation, and it seems to be that we're tracking to about 3.6% of inflation for the year, which is much better than 8%. So things seem to be on the right track economically. So what does this mean for, we can talk for hours about the economy and forecasting, but as you can see, there is the news cycle is so short, there are things happening all the time. And my most important concern and question is, what does this mean for my clients? What is the potential effect that it can have on you and your family? And what is a plan of action that we together need to implement in your case and in your situation? I want you to be assured that whenever something happens, I am very vigilant about going back and looking at your portfolio and making sure that you are not exposed to more risk than you're supposed to be with your plan. And you've heard me many times say that my investing decisions are long-term and they are based on your plan and what you need to do to get to your financial goals. Your portfolio is allocated in accordance to your risk tolerance and your time horizon and your goals. And what I would say is I have the utmost confidence both in your portfolio, your plan, and also the expectations for the market long term. We know that the markets are still the best bet against inflation and your best chance of maintaining your purchasing power and not running out of money in retirement, which for most of us is our major financial concern. So what I would say, the guidelines that I will be speaking to you very soon is, when do you need the money and what do you need it for? If you have if you have a goal that requires money and we need to use your portfolio in the next 6 to 12 months, we should figure out if there is any proportion of it that we should move to cash or a CD-like instrument. Incidentally, CDs, because of the higher interest rates, cash now earns higher rate, and even the Vanguard analysts recommended keeping a good proportion of assets in cash because the returns have been so good. So if you have short-term needs for money, let's discuss how we can meet those and reduce the risk and the volatility in your portfolio. But if your long-term goals stay the same and if you're saving for retirement and a long time horizon, my best recommendation is to still stay with the markets, not make any rash moves. I do not trade your portfolio just because of the volatility, because the volatility is assumed to be in the portfolio. And historically, the S&P has dropped 30% every 4 to 5 years, but it's always has recovered handsomely and has marched on and has provided for many people's financial needs. So what I recommend, I will be staying very close to the news and reaching out and communicating in case any drastic events happen. But in the meantime, I will be reviewing your accounts. I will reach out to you if there is any indication that anything should change, and we'll stay in close communication to make sure that you stay on course, you stay calm, you stay positive and confident, just as I am. Right? I will talk to you soon.